So we had 3 clues. Those 3 clues, once again, are used to put together our plan of attack today. First clue was the wedge. Mark up those 2 swing lows, mark up your swing high. There was one way back here too, and of course we found our price wedge. Price wedge tells me buy the lows, sell the highs, avoid the middle. A price wedge also tells me to expect fake out breakouts. And then the second clue we had was the inside day. And you've probably heard me say before, if I had to choose one price structure for the rest of my career, it would be exactly this: an inside day with a price wedge. It's almost a guarantee, guys, because we know inside day says fake out breakout personality. Wedge says fade the highs, fake out breakout personality. So we have 2 price structures that are saying the same thing to us. And then the third clue made it really easy. The third clue was the dollar. The dollar, with its negative correlation, also had a wedge, and it was at the highs of that wedge. With the negative correlation on the dollar, we know right away here we need to buy those lows on the euro. And so what we did this morning was we literally waited for price to come down to the lows of that wedge, waited for that dollar to start to fall off the top of its wedge, and it was a perfect example of how easy it was for us today to buy those lows in the euro. Now, price action was still pretty sloppy. So what happened was we had your wedge, we came down, 2-step pattern, 1, came up and failed. I then took the second 2-step and took it all the way up to the middle of the range. Now, that was our profit target. Our profit target was right in the middle of that range, and to be honest with you, we would like to be able to take it all the way up to the high of that range. But because it was so slow and sloppy today, we were excited to take the profit when we could. So we knew we had the trigger zone in the middle. The middle of the range is always going to be a good place to take some profit off. Ideally, we'd like to go all the way from bottom to top or top to bottom, right, of this wedge. We go down to the lows, 2-step pattern 1. You can see it goes up, comes back down. 2-step pattern 2 goes up and comes back down. But of course, the first one at 913, +5, -5. Stop begins at -10. Target's at 5, 10, and a runner. When I go to a +5, my stop was to -5, and of course it came back down and bounced me out. So nothing in, nothing out, 913. That didn't take much longer though, but a half an hour later, we're back to the races here, buying it again for 44 more ticks. So it's a great example today of how we didn't give up on that pattern. We didn't give up on this price structure. And again, like I said before, a wedge pattern tells me fade those breakouts, right? Fake out breakout, which means if I try once and it fails, if it comes back down, when it goes back up again, I'm going to try it again. All right, how many times have we seen a wedge try to buy those lows, fails, buy those lows, fails, buy those lows, and then what does it do? Bam, right? It jumps. Let's jump to crude now. Here's a crude chart, and here's my 34 range on crude. Now, there's a lot going on in this chart right now, but I wanted to show you guys what we used here, right, to get our first couple trades going on crude today. It wasn't until about 10 o'clock, 10:30 this morning, we actually started taking trades on crude today because it was, after all, very slow today. Now, first of all, we began with this double bottom. And the double bottom really didn't make much, it didn't really do very much for us, today, so to speak. But it did tell us, though, where we had the max extension. And you can see price literally went right up and tested it and then began to come tumbling back down. We, of course, looked to buy right there when it came tumbling back down. Now, let's zoom in real quickly here, because what you see is we see a new higher high and it begins to pull back. Well, what I do is I mark up the swing low, mark the swing high, and what does that give me, folks? That gives me my trigger zone. So our trigger zone became a really important clue here because, again, the double bottom that we found tells me that price should go right on through and down to the open again. Should, keyword should, right? No guarantee here. We also knew, though, the bold channel, right? The bold price channel says buy pullbacks. The bold price channel says buy the lows of the channel. So if we have this trigger zone right here, and members, you know what I'm talking about, log into your advanced course if you want the lesson on that. So we're going to look for now wave pattern long. And so we began with the bold channel. The bold channel said buy the lows. We knew, though, that if price went through that trigger zone, it was going all the way down to the open because of that double bottom. So that was on our minds while we were taking these trades today on crude oil.